So exactly what is a falling knife, and what is your idea behind catching those knives?
You're not alone. My wife also asks these same things. She's like, I don't know. It seems violent. Like, what is this? So I was clever with the title. And part of it is, so in the financial world, and it's often equated to the stock market, is when a devaluation is happening. And let's say, Tesla stock is at $420 a share, and then it starts falling down, and you want to wait until kind of the values have kind of bottomed out. And then when you buy back in, and so if you might just be like, all right, it's gone to 69, like, let's go buy a bunch of Tesla shares. Well, in the equities world, bonds or REITs or stocks in general, you can go buy in anytime that you want. Hey, it went down from 420 to 200 to 69. You jumped in, you bought those. And as many shares as you probably want to invest, you can go buy those at that time. But real estate, it's scarce, meaning that, that office building in downtown, Atlanta may only transact once a generation. And so when that distress does happens, and when there's a circumstance in which you need to be able to go buy that, or the incidence is I bought a lot of stuff at foreclosure and the courthouse steps, you might only have a couple of weeks to prepare for a sale or a transaction, and you need to come in and move quickly, and you could get it not at 70 cents at all, you get it 60 or 50 or 30 or 20, because there was a very big disconnect from what it was worth to what it was going to transact on. And so the bigger the dollar amount, the more homework and the more preparation you need to do before it actually comes time to sell. And so it's a little bit of like skating to where the puck is. Like, you need to go do the work. You need to assemble your team. You need to go prepare for your investment thesis or your criteria before it actually happens. The reason being is that when that opportunity, that knife is falling, you will have the ability to reach out and catch it and not get cut. And it doesn't matter if that valuation goes down even further if you're executing your business plan. So again, you go buy a building that was, worth 10 million. Now it's selling for 6 million. Let's say it continues to go down and now it's only worth $5 million. But that's okay, because your business plan was to fix it up or to modernize it. And then you're not going to sell it until 5 years or 10 years into the future when the values come back up. And so you're like, great, you make your money on the buy. And it only requires one other person to try to buy that asset. And if they buy it, you're out. All the homework you did, all the efforts. So unlike the stocks where, hey, I want to buy a stock, you want to buy a stock, we go buy it tomorrow, we can both, win out on that because it's our little fractional share. But if it is an apartment building, it is an office building, it's a hotel or anything else, all the things, there's only one of those that may trade once in a generation. But also what it can do is it can create generational financial freedom. One transaction. Which is interesting, I don't know if I don't think I addressed this in the book. I met a billionaire. I was having lunch with him, and talking to him. Next to the 10-story building, I have, in downtown San Antonio, there's a 32-story office building, and it's called the Weston Center. And his name is Graham Weston. He is a billionaire, multi-billionaire. He bought that 32-story office building at auction. And he only had a few $1 million that he borrowed from an investor. And he got the bank to carry back the remainder because he was going through a foreclosure and distress. Sam Zell was trying to outbid him. He bought it, moved in some new tenants, refinanced the property all within like 6 months, paid all of his investors back, and has owned this 32-story office building his, entire investment career. It was actually the first piece of real estate that he ever bought in his entire life. He was 25 years old, 27 years old. He didn't even own a house, but he had a 300,000 square foot or 250,000 square foot office building that was 32 stories in downtown on a few $1 million of borrowed money that he just moved. And he moved a new tenant into the building at 28. And so then he's been making hundreds of thousands of dollars in cash flow on that one deal because he took action, because he was in the right place and in taking action and being prepared for that when it did happen. And that has then made him a billionaire because he had cash coming in that he invested into other businesses. And then one of those businesses turned into a $10 billion business.
Yeah. And one thing that still rings true today within the residential side of things is the word action. That's such an important word. And it's one word that prevents the majority of those investors, wannabe investors, not saying that derogatorily, just people that really want to be investors, that study their butts off, that read a lot, that define their buy box, that figure out exactly what they want to invest in, but they're super afraid. They get analysis paralysis and they never take action. If Weston never took action on that opportunity and caught that knife, he would have never gotten to the success that he is today. He would have never achieved that, lifetime generational wealth that he has created. And it's the same in residential, because there were times in 2018, 2019, when house prices were starting to go up. They hadn't surged just yet. And people would list their properties and they were starting to disappear really quick. The time on market was starting to dwindle in late 2019-ish. And something Tiffany and I, my wife, we had a buy box. We had financing figured out. We had all of our tools in place. And when a property would come on and the MLS notified us and we saw it come on, we'd be under contract within an hour or 2 hours. Instead of those others that are not taking instant action and don't have the clarity to see, oh, this is exactly my buy box. This is exactly where I want it to be. There's value add here. There was no question for us. We knew when to push the button to say, go. And we had everything lined up. Like you said, have your team assembled and ready to stick your hand out there and catch the knife, or else someone else is going to catch it, or it's going to fall all the way to the bottom. And then it's going to go to that auction and then sell to the highest bidder, whatever. What's your